Yo, what's good everyone? Back 2nd of January. Good to be back. Today I was out all day, so no trades from me. However, there was multiple opportunities today to catch trades with my model. Now, I know a lot of people will say, yeah, this is hindsight trading and all that, but this model prints. I've got so much proof that this model prints that me taking one day off because I'm shopping, I don't mind it. Like, if you want to say hindsight, cool. I know that this model works, so that's what I really need to do. So anyways, today we have recaps on GBP USD. I believe both sessions, or is that GJ both sessions? GBP USD London. I believe it's GJ, New York, and London. Yeah. And then someone in my comments was talking about Bitcoin, because the last video was on Ethereum, and now I was wondering, I was like, surely it works. I backtested it, it worked perfectly, so I'm going to go over that as well. And also we are going to go over your USD and GBP CHF, just for more content, do you know what I mean? Because I've already got Bitcoin, GU, GJ already set up, so I just have to run it back. But the Euro USD and GBP CHF I haven't looked at today, so that will be a little like a proper live backtesting with the trades I'm about to show you now. I already know that it works because I was watching it. I just couldn't trade because I was out. So we'll start with GJ London. So actually we'll clear drawings, that's cool. So coming into London, 15-minute time frame. I've got all these other ones. You don't really need it. All you need is 15, 5 and 1 and 3 if you want. That's why it's called the 1551 model. 15-minute liquidity, 5-minute equilibrium and PD arrays, and 1-minute entry. However, you can have all the other stuff, it's up to you. So London session, marking our buy side and sell side. Now this is also called Asian high. That would be Asian high, and this is just a 15-minute buy side. On the contrast, this would be Asian low, and these other little ones would just be Asian just sell side. So obviously we know we're in a downtrend right now, so we wouldn't really be marking this. However, you can if you want. It wouldn't have got tapped until the trade had already played out. But yeah, so first step, as we already know guys, mark up our buy side. Simples. Wait for it to get hit. Now in this example we can either, just because there's quite a lot of fractal lows in this area, we could either take equilibrium from here, or we could take it from here or here. Now this one wouldn't count because it's on market open, so it'd be this one, or if you really wanted to, it'd be this one. As you can see, all these get hit, but if you want to be a bit more safe, you can take it to this or even this. Now obviously once we'd already hit our final PD arrays, so let's say we did this one right here, PD array right here, we'd find more on the 5-minute. Our trade is now risk free, so all of this extra movement would have still been caught. It just depends how safe you want to play it. Now with this trade, personally I would have rather had it here, because obviously I can already see I've got a 15-minute fair value gap right here. But like I said, it's up to you. Once you know this model, if you trade this model, it's honestly down to you. Like, because it is so fluid, it accounts for the majority of the moves in the market. You can pick and choose once you get confident with it. So marking up our liquidity point, we started from here, like I said, blah blah blah. So 5-minute time frame. Now we're watching price, so we would have marked up liquidity on the 15. We're now already on the 5, so as soon as it reacts and makes equilibrium, then we know, cool, we're going to move to the 1-minute. So we're already on the 5-minute as soon as we've marked buy side. So as you can see, market opens, it reacts, it puts in this high because that's a low. So if this was another high and there was a low, this candle would have been the high would have been looking at. Now, I went over this last episode. The reason this becomes a fractal high is not only because it's on other time frames, but the reason why this is high, a lot of you man probably all know this, the only candlestick formation you'll ever need ever in trading ever is a high and a low that makes an official high or an official low. So we've got our high and then our low, and then we put in the line to show, cool, this is where we're going to look for trades from and trade entries from. So once you've marked this, you've got equilibrium right here, you've got your line. Obviously you would have done your PD arrays first, however it's up to you. For backtesting purposes, I'm just going to do it now because it's a bit more easy to see. So I just like to drag it to here. So I wanted to show you this fair value gap example. Why would this fair value gap not be valid? Because this candle wicks below it and continues. If this wick was like here and didn't fill it in properly, cool, we could have used it. However, this has been filled. So instead of using this fair value gap, what we're going to do, guys, just use that swing low. Simple as that. Now, same with this. You wouldn't do this because that got took, so you'd use this one. So you mark up a swing low. Now for example purposes, I'm just showing you the possible TPs you could have had. I'm just going to show you every single TP you could have had. Now why is this fair value gap valid? Because one, we put our TPs on the middle line. Has this wicked through the middle line and filled it in? No. Cool, this is a valid take profit line. Now we've got another fair value gap right here, that's fine. Doesn't get filled by this candle, it just touches it and flies. Absolutely fine. Got another fair value gap right here. Bit to that line. And do we have another one right there? Most likely it looks like we have a little tiny one right here. Perfect. So got our PD arrays mocked up. Now we're going to go to the 1 minute time frame and look for entries. So what is our entry model, guys? You already know this. Breaker structure and a fair value gap. You already know this. So this is our black line to start looking for trades. We wait for a breaker structure and a fair value gap. So this would be our low from here. So we put it here. Does this candle break? Does it close below? No, it doesn't. Does this one? No, it doesn't. So now we just move it. Oh, we'll do it precise. I like it nice and precise. Does this candle close below? No, it doesn't. So we delete it and try again. Does this close below here? No, it doesn't even come close. So this is still a valid one. We can pull this a bit further, and now we've got this low. This is the most low right here. Does this low close below that one? No, it doesn't. So we're going to delete it. This low right here, does it close below? No, it doesn't. So we're going to delete it. This low right here, does any of the candles close below? No, it doesn't. So you're going to delete it. This candle right here, does it close below, guys? Yes, it does. This candle closes below this, which means this is now a break of structure or a market structure shift or a change of character. They all mean the same thing. It is honestly up to you guys, whatever you want to call it. So we've got our breaker structure. Now we're looking for fair value gaps that are before the breaker structure, or sometimes after. It just depends on the type of fair value gap, and I'll make a video on that upcoming. So here we've got two. We've got this one right here that gets formed after. Now a lot of the time, actually not a lot of the time, sometimes you get a fair value gap made after the breaker structure and then it melts. However, in this example, this is the first proper day where the forex market has been open. So it's gonna want to retest it a little bit more before it makes its move. So we've got this fair value gap right here, we've got the middle line right there, and as you can see, let's zoom into price. Cool, so it gets made this fair value gap, come close. Now, as I was talking about yesterday, I personally know my model, so I could have entered after seeing this rejection, stop loss here. But for backtesting sake, if you want a bit more confidence, if you're not that confident with the model yet, which a lot of you guys won't be, as this is a very new thing that's come to you, this is what I would suggest. So we've got price, comes back up, respects middle line, another entry that I would have taken because it rejected middle line, it respected it. Or you could have entered here, it comes back down, goes back up with a bit of displacement, then a bit of displacement down. Now, if you want to be safer, you can wait for a candle in your direction out. So you could have either entered right there, or you could have entered right here. Obviously, you would have had a bit more drawdown right there. Stop loss would have still been the same. However, if you want to play it safe and you want a bit more confidence, you wait for a bearish candle out if you're looking for a short before entering. So you would have entered on the open of that candle. Where would the stops be? Would they be here? No, they would not, because that's in the fair value gap. If price comes back up, fills it to here and melts, then you'll kick yourself, because that's not where you're supposed to put your stop loss. You put your stop loss above that high. And where do we target, guys? Where do we target? We target this, the middle line there. This low, actually, I just forgot about that one. The middle line there, middle line right there, middle line there. So TP1 would have been absolutely smashed. Let me just drag this out so you can actually see. TP1 absolutely smashed. TP2 absolutely smashed. TP3 absolutely smashed. TP4 absolutely smashed. This point would have been break even. And as you can see, you would have obviously found lows to target. You wouldn't just go, oh cool, we're going to just pretend like it's this low. However, for example's sake, just because I've got a couple of other pairs to get through, this is how much you could have had if you'd have held this trade. Bear in mind, you're risk free. This is a risk free trade after you've hit TP4 with no drawdown at all. So this is a perfect trade in my opinion. This is honestly gorgeous. Like, I honestly wish I'd have took it, but here's what it is. You miss opportunities, it's fine. Like, I know this model prints. I ain't got to worry about missing a single opportunity. This model prints every day. So anyways, the first trade that we've just looked at, 20R. Now, you tell me if that's crazy or not, because I think that is personally. But anyways, that's just me. So, just drop my headphones stand. So, why did I want to keep this one right here? Why did I want to keep this breaker structure right here? Why do I want to keep this low? To show you guys. Now, the reason why I wanted to keep this low is showing you, you could have got a re-entry right here. Now, you get your breaker structure right here. You've got a fair value gap right here. Now, in this example, yes, it does close above. However, look at the next candle. Bear in mind, we don't enter until the candle out. So look at price, yeah, cool, filled. Bearish candle down. Another bearish candle down. You'd have entered right there because this candle escaped. Or you could have entered there, up to you. And you would have entered right here. Stop loss would have gone above this high. Because remember, we're not taking it off this fair value gap no more. We're taking it off this one. So now we're going to target the same. Right here. AR, not bad. And now we're going to show all the rest free profit that you could have printed. 42R. Now that sounds a bit crazy because it is a bit crazy. But this model prints This model is insane, guys. I'm telling you. Like, I'm not even trying to sell you a dream or like nothing like that. It's just insane. I'll come up with the backstory of why I made this model and how I made this model, because it's a sort of a separate video. It's not really a backtest video, but trust me, guys, this took me a solid couple of months, like, to really sit down, look at the charts and go, cool, I need to change my trading, so like, let's do it. So GJ, I will keep examples on. I'll run you through exactly what I was seeing as these candles were printing out. So once again, guys, I want to mention, I did not take these trades. These are just, I just wanted to live backtest my model and explain a bit more in depth with a couple of more examples on Forex now that it's open. And I will start live trade recapping from either tomorrow or a couple. I'm going to do it tomorrow, depending on, I need to look at news, or I'm going to do it next week when the Forex market is finally settled in. So we're going to look at GJ London. Same sort of similar thing. You could have marked this one. This is Asian high, but obviously this Asian high doesn't print equilibrium. So you would have looked for this one, and if there's any more, that one as well. So this is our buy side, guys. Buy side liquidity, perfect. Now what are we going to do? Mark our equilibrium. So in this example, it's a bit more clean. So you could have taken it here, taken it there. You wouldn't have taken it down here, even though it does reach down there. You wouldn't have taken it down there because you want to secure your profits and just be risk free as soon as possible. So we've marked our equilibrium. I'm going to jump on a 5 minute to confirm our equilibrium. Equilibrium has been confirmed. So why has equilibrium been confirmed, guys? You got a high that takes out this. You got a low that confirms the fractal high, and then we look for trades here. The reason why I'm not even going to talk about this is because the way my model works, right, now I'm going to show you on a different chart because I want to show you the precision of this strategy. That's the wrong one. Precision of this strategy. Now let me get my equilibrium. Everything's white. Why is everything? Let me remove drawings. There we go. So the precision of this model, why is it so precise? Now we've marked our buy side, call, it's been taken, that's our equilibrium level. Now we're going to go on the 5 and I'm going to show you exactly why. Any doubters that go, oh yeah, but you're just doing it in hindsight, no, this is not hindsight. You're on the 5 minute. Cool, equilibrium gets set right here. Okay, so now we're going to go on the 1 minute and let's see what happens after marking equilibrium of a currency pair that is not yet ready to move. So actually, let me put my line in. Sorry about that, guys. I just want to really stress how precise I've made this model. So high, low, taken. We look for trades on the line after. So anything on the line and after, we look for trades. So that is the right line. Cool. So black line. What are we now looking for? Breaker structure, fair value gap. This is our low. Does it get broken? No, it doesn't. This is our new low. Does it get broken? No, it doesn't. And then it goes up to the original one that we've just shown, and then it breaks structure and fair value gap. So that is just to clear any doubt of anyone going, oh, you're trading in hindsight. No, I'm not. This is how precise the model is, as if you don't get a breaker structure and a fair value gap, the market is not ready to move yet. Now in this example, this was precise. This is like almost A-class setup in my opinion. It comes straight to our breaker structure point, got our fair value gap right here, comes straight up right here. Now you could have either put a buy limit on the line, stop loss, where's it going to go, guys? Above the high. It's a bit of a big stop loss, so you're going to have to at least target a 1R, otherwise you're not even going to take it. So we would have found 5 minute right here. So the way this model works is you put your stop loss above the high no matter what. And I get a lot of hate for that. I get a lot of hate on my TikTok that blew up, and it was like, what's the point in going for a 1R? What is the point? And it's because strict rules. You've just seen trades that has been an 8R and then a 20R risk free. Why do you think I like having my stop loss this high? Because it works. It doesn't matter if this is not a 1R trade, then you don't take it. It's that simple. So as you can see, this is an example where you'd use the 3 minute. If you do have a stop that's quite big due to the high being quite high or the low being quite low, you can use the 3 minute, and there's your fair value gap right here, and that is just about a 1R, so you could have taken it. And bear in mind, after you get to equilibrium, all this profit now is risk free. So what does price do? Let's just run it back. And a lot of you man will agree it's cool. Like, one-to-ones are fine. Like, if you know this model, you know one-to-ones are cool. So what? Get a 1-to-1 in, when do we enter? Right here, in about, let me actually work it out, in 5 minutes. Yeah, so you've either printed 1%, 2%, that's it. Now you're risk free. You don't care about stop loss no more being too high, because you're now risk free. So any little thing that you get is now risk free. Now, like I said, this is quite a main target. You would like to look for targets to target, not just show how much you could have made. However, in this example, you could have even targeted all the way down here for a 5R. Obviously, you could have targeted equilibrium of there, lows, whatever you like. So let's just say we caught the exact perfect trade and we found the exact equilibrium that would have taken us over. That would have been a 7R. And remember, guys, we've been 1-to-1R in about 5 minutes. So all of this is this extra profit. We've already made our trade. Like, there's no problem with taking 1R trades, because it prints. This model prints. Like, if you're people going for 8R, 10R, 20R every single time, you're not going to be profitable. You're not going to pass your funded accounts. Like, it's just not going to happen. It's not at all. However, once you know the model, you can then start being risk free and getting bigger RRs instead of just saying it. So anyways, that was GJ London. Now let's have a look at GJ New York. Coming into it, let me delete this line. Coming into it, these has already been taken out. That would have been a point of interest, got taken out. Point of interest taken out, point of interest taken out. Continue with displacement. Now, got a fractal low right here, here. This one gets tapped into. And what are we going to do now? We're going to mark equilibrium. This is our discount. We're now on our 5 minute time frame. 5 minute time frame. Let's have a look at PD arrays. And this is still happening. This is more of a forward test than a back test. I think I did this whilst I was in the shop and I just left it on. I believe that is the case. So let's have a look. We'd have had the PD arrays there, right here, right here. That's not a fair value gap. That a bit too long. Got one right here. That doesn't get filled yet. Oh no, it does get filled. My bad. So that wouldn't have been one. And now we're going to jump on the 3 minute just to make sure we haven't missed any at all. We've got one right here. However, I prefer this one as a safer one. Got that 1 minute. Have a look. This isn't a fair value gap. Why isn't it a fair value gap? Because the lines do not give a gap. Simple as that. Literally as simple as that. So those are PD arrays. Like I said, I like using a 5 because it's a bit more cool. This is really a fair value gap because it's confirmed by 5 minutes. It's not just a 1 minute one. So this is actually a forward test. So that's quite interesting. Anyways, we're looking at price on the 5 minute. Price is now set in equilibrium. We're looking for trades right here. 1 minute time frame. And cool. This is our high. We want to break. Does it break? No, it doesn't. It puts in that high. Does that break? Breaks here. But there was no fair value gaps in this entire range. Does this one break? Yes, it does. And now, in this example, because this one's so close, you wouldn't have looked at this one. You would have looked all the way over here. And this would have been our breaker structure. It is this candle that breaks. This candle doesn't actually break. It's this candle. This fair value gap right here. Let me pull it across so you can see. Touches the middle line. You'd have entered either on a buy limit on the middle line, or you'd have waited for a candle out. So you could have done this one or this one. Stop loss would have been below the low. And as you can see, there's a little bit of drawdown, not too much. And this would have been our first TP, which is a 3R. Now in this case, we haven't actually hit TP yet. However, because your first TP is a 3R, you are more than welcome to target these highs just here. Now, this depends on your trading psychology. If you want to secure profit, and if you're even just smart, like, you don't have to have your first TP as a 3R. If you want, as long as you mark PD arrays for price to go to, as long as there is PD arrays, it's called a narrative. As long as there's a narrative, yeah, that is all you need. Obviously you target that, but you can also take profits wherever you like. If you wanted to do it fixed, this is now going to any type of trader. If you wanted to go, if you was a fixed 2R trader, 2R right there, 3R trader, 3R right there, like, this is just market intuition though. Like this, I'm trying to make this as simple as possible, but in this example, this all comes down to market initiative and intuition, and just looking at this setup. Cool, we got a perfect setup. Equilibrium's quite high, so let me play it smart and let's secure profits. Secure some profits at a 2R or a 3R or these highs just below equilibrium. But as long as there is a narrative, that is all that you need. Because if there is no PD arrays up here, the majority of the time, price is going to carry on lower, make an equilibrium bigger, and then there being PD arrays for it to target. If that makes sense. This is also quite a long video, guys, so I do apologise. However, this is a very useful video because I'm going over a lot of pairs, both sessions, and yeah, so if you're still watching, you made it. A lot of people don't have the discipline to even still watch there. So what one did we look at Bitcoin on? Which broker? Because I marked it up all yesterday. There we go. There it is. So this was the same day. This was yesterday. The same trade as Ethereum. So I'll clear this for you just to make it a bit more clean. Coming in, we got a high here. This is just previous session high. It wasn't really a session because it was Sundays. Like, if you want to class it as a session, you can, but if you're classing it as like a proper open hours session, then this was just an old session high. But so liquidity right here. This is technically classed as New York high. We've got buy side right here, so we're going to mark that as buy side liquidity right now. What we're going to do, jump on the 5-minute time frame, but before we do that, this is the low. There's no other lows in this range, so this is our discount. From here, you drag it out to there, go back onto the 5-minute. We're watching, and as soon as we get a high put in, we can then tailor it to our equilibrium point. So as you can see, 5-minute price comes up. I'm going to put it right here because it makes high, low, cool, done. And now we're going to put our line in just to signify where we're looking for trades. Now let's get our narrative. So we've got a fair value gap right there. Another little fair value gap right here. And if you guys don't like longer videos, let me know, because yesterday's one wasn't short, but it wasn't long. It was more of a medium-sized video. So just let me know what you actually want to see. That is also fair value. Let me get it. I can't really talk and do it at the same time. That's quite bad. But let me know what you want to see. Like if you want to see shorter videos of each pair, or if you want to watch a long video. It's honestly up to you. I don't mind. I just enjoy helping people as much as I can. So we've got our PD arrays set out right now, and let's look onto the 1-minute time frame. And where are we? There we go. So we've got a narrative. That's the whole point of marking PD arrays, just to get a narrative. So now guys, we have this low. What happens? Break structure. Where we're looking for fair value gaps in, from this low that gets broken to the high up top. So anything in this range, we're looking for fair value gaps. Do we have one? Right here. What does it do? Come up perfectly to the middle line. Where would we put our stop loss, guys? I know you're probably all saying it, and for the people that don't like my one-to-one trades, they probably don't like having strict rules for stop loss. It goes but I can't speak, above the high. No matter how many pips it is, it doesn't matter, it goes bar above that high. So where are we targeting? We're going to target this equilibrium line, and this equilibrium line, and this equilibrium line. And as you can see, let's pull it out until it starts reversing and see what would have got hit. So TP1 would have got smacked, TP2 would have got smacked, TP3 didn't get hit. However, I'm sure if there's a 1-minute fair value gap, it would have been the exact reason for why this got taken out. And I've just spotted it. It was this, it's either this low, I believe, or this fair value gap. Let's mark them all out and see what the reason was for it to be, for it to reverse. So we've also got this change in state of delivery right here. And let's have a look. What one was it? We've got our low right here. We've got our low right there. So it was that low's reason. So we'll get rid of all of these. It was this low's reason for why it's now started to reverse. So that is a 10R. Easy. Now, if you have any questions at all, let me know. This is a 34-minute video, so I am going to record another video and I'm going to post it for tomorrow, backtesting GBP, CHF and USD, just because I don't want to get it too long, because it'll take a bit longer to upload to YouTube. I don't want to get it out tonight. So any questions, let me know. Remember guys, my Discord is right here. Right here, I've got a nice little community. Got about 20 people in right now. It's just chill. There's data, there's obviously when I post my models. It's just nice. It's a nice place to be. So yeah, any question guys, let me know. And yeah, join the Discord if you like, subscribe, do all that shit, or don't. I'm just posting to help you man out. So yeah, peace till tomorrow.